please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Because we have lots of big guests joining us now to tell us how the situation is there. First up, Pirojsha Godrej, the Executive Chairman of Godrej Properties, joins us from the sidelines of the Kotak Institutional Equities Chasing Growth Conference. Pirojsha, hi, good morning. Thank you for being with us on CNBC TV 18. You know, you've recently added a new residential project in Gurgaon. You've been expanding in NCR, Gurgaon for a while now, and this is a market that was really weak, but you've managed to become a market leader. What's the outlook there? Is the worst of the slowdown behind us?
The NCR market has been a key part of our company's growth strategy. The way we're looking at things is that we really want to focus our business development activities on the top 4 markets in the country, which are Mumbai, NCR, Bangalore and Pune. And these, we think, contribute to the vast majority of the value of real estate sold, and therefore it makes most sense for us to deploy as much capital as we can in these markets. Within that, I think NCR has been a market that we've been very happy with the response we've received. We first entered the Gurgaon market in about 2012 and have since grown to become one of the leaders in that market. Over the last couple of years, we've also entered the Noida market, and we've had 2 very successful project launches there in both Greater Noida and Noida. So yes, I think overall the NCR market is something that we've been very happy with. We've just added another new project in Gurgaon. We have quite a full launch calendar slated for NCR over the next 12 months. We're actually in the process of launching a new project in Sona, also in NCR, and that project has fortunately received a very strong response. So I think the NCR market will continue to be one that we see a lot of new investment and a lot of new project opportunities in.
Okay, Pirojsha, so maybe some numbers. Obviously, NCR is working really well for you. So the sales pipeline for the remainder of this year and the next?
Sonia, you know, we typically at the end of each financial year decide on the next year's pipeline and then announce that as part of our Q4 results, which we'll stick to this time. But I think, you know, we're quite positive with the momentum we're seeing both in business development and sales. So that should lead to a pretty healthy pipeline for next year. For this year, for example, in the first 3 quarters, we've already sold about 4,000 crore worth of real estate. And to put that in context, we sold 2,000 crore in all of the previous financial year. So within the first 3 quarters, we've already seen 100% growth. We've also seen our business development portfolio additions increase by 100% in terms of the area we've added to our portfolio so far this year. And that usually translates in the following year to robust sales launches, because each of these projects we now are entering, we would typically quickly try to complete the design and regulatory approval process and then bring those projects to market. So while I don't have a specific number of launches that I can give you right now, certainly I think the next financial year should be our best ever year for new launches.
Okay, Pirojsha, good morning. There's a report by Ambit which suggests that there's been a downtick in prices in Pune, Bangalore and the MMR region, while Ahmedabad and Hyderabad have seen a rise, and also that unsold inventory levels in Mumbai are high. What's your feedback?
I think a couple of points on this. One, prices have been flattish, I would say, for the most part across the country. In some markets like NCR, as you pointed out, they have actually seen reasonably significant declines. So I'd say on average, many places in NCR are seeing a 20–30% price reduction. In most other markets, you're seeing quite flattish prices. What you're also, however, seeing is a large amount of consolidation happening in the industry. So I think the top 10 or so real estate developers in each of these cities is rapidly gaining market share at the expense of smaller players. So that segment of the industry does have certainly much better track record on volumes, but does also have a little bit better pricing power. But overall, I think, you know, the downturn in the sector has continued now for the 4th or 5th year at least. And I think we expect, though, that situation will turn around quite significantly over the next year or 2, because if you look at it now, the economy is doing reasonably well. Real estate affordability is the best it's been in over 15 years, with interest rates having come down, property prices being flat, people's incomes having grown. So our own sense is that you will see prices start picking up over the next year or 2. But certainly for the current situation is that you aren't really seeing that in any market yet.
Okay, well, that's good to hear that at least the affordability has improved. So, you know, you're seeing more traction there. There's also a view that the RERA implementation will lead to more land bank opportunities, especially for pan-India players and for players who have a healthy balance sheet like yourself. How has life changed for you after RERA?
I think this process of consolidation I mentioned in the industry was already underway much before RERA. But I think it's certainly fair to say that RERA has added a lot of impetus to that process, because I think many unorganized developers will struggle to continue in the industry with this kind of a governance framework. So what we're seeing is a greater number of land opportunities, both for outright purchase, but also for the partnership structures that we typically prefer. And I certainly think that that will continue to gather pace over the next few years.
Okay, Pirojsha, what could be the project additions over the next 2 or 3 quarters?
You know, in the first 3 quarters of the financial year, we saw about 20 to 25 million square feet of new project additions, and these are all in the form of various partnership structures. You know, in some ways, that's a little bit misleading because the area is not really as relevant as the value, and I think if we add a project, say, in the heart of Mumbai, that's not worth the same amount as, you know, in some of the suburban areas of other cities. So I think area may not be the best metric, but certainly it's one important metric. And I think, if anything, we should see that pace of additions, which is already very high, gain further pace in the next year, because market conditions are pretty much ideal for business development. Our own sales momentum is quite strong. The number of micro markets in which we don't have projects and would like to add projects remains very large. And most other developers and landowners are feeling a bit of difficulty in the current environment. So they are very happy and excited about entering into partnerships with us. So I think that combination of factors means that we should hopefully be able to ensure that our business development track record only strengthens from here.
Okay, just one final question then before we end the discussion. You know, the phase 3 of the trees project was delayed for a while. Of course, it's now on track, but when can we expect revenue recognition for this phase?
There's been no delay there. It's actually, the construction's moving on at a great pace. We actually launched the project only in the first quarter of the current financial year. So we certainly think that that will hit revenue recognition either this quarter or next quarter. And usually, actually, that's a little bit faster than usually is the case in the sector.
Okay, well, all the best for the quarters to come. Thanks so much, Pirojsha, for speaking with us.